Welcome to the deep dive. Look, artificial intelligence is basically rebuilding everything, right? And that means the U.S. stock market.
Well, it's buzzing around a few key companies.
Absolutely. It's pretty intense right now.
So today we're going to try and cut through some of that noise. We're focusing on the AI sector, breaking down the really important U.S. companies that analysts are highlighting, looking towards 2025.
Yeah, it's a super exciting space. You've got the chips, the huge data centers, the software everyone uses. Our sources today really zero in on those, top U.S. players for next year, the ones really driving things.
Our goal here is pretty simple. We want to unpack what these giants actually do, figure out their strategic edge, their moat, if you will, and also point out, the potential risks involved.
So you walk away with a clearer picture of how all these pieces fit together in the whole AI boom.
Definitely. But before we jump in, we absolutely have to state this clearly, especially with market stuff.
Yeah. This deep dive, it's purely for educational analysis, okay? We're looking at reports, synthesizing information. We are not giving financial advice.
Couldn't be clearer. Always. Always do your own homework or talk to a licensed professional. Always.
Agreed. Okay, so let's get into it. We've kind of broken this down into three main areas to make sense of it all.
Makes sense.
First, the hardware guys, the ones making the actual chips, then the big cloud and software companies, and finally, some of the more specialized players focusing on specific data niches.
Yeah, that breakdown is really helpful. It shows it's not just one stock, right? It's this whole tech infrastructure being built out. It's massive.
And you can't talk infrastructure without starting with the absolute engine room, the silicon.
Mm.
And right now, that conversation pretty much starts and maybe even ends with NVIDIA. NVDA, they are just the face of this AI wave globally.
They really are. And the why is critical. Their GPUs, their graphics processing units, they're basically essential for almost all the heavy-duty AI work.
Like training the big models.
Exactly. Training those large language models, running complex inferences. You hear about OpenAI, Google, Microsoft, Amazon doing this stuff.
Yeah.
It's almost always NVIDIA hardware doing that really intense parallel processing work, the heavy lifting.
Okay, so the hardware advantage is obvious. But the sources we looked at really emphasized something else as their real competitive advantage, something beyond just the chip design.
You mean the CEDA ecosystem?
Yes, that's it.
Yeah, CEDA is. Well, think of it like NVIDIA's own special operating system just for their GPUs.
Yeah.
It's the software layer that lets developers actually use the hardware efficiently.
And that creates lock-in.
Massive lock-in. It's been built up over decades. So competitors,
Right.
They're not just trying to make a faster chip. They somehow have to convince legions of developers to ditch a system they know inside and out. That's tough.
It sounds like a huge barrier. But speaking of competitors, something caught my eye in the material. NVIDIA actually investing in a rival, Intel.
Oh, yeah, that was a big one.
Yeah.
NVIDIA recently announced this huge strategic investment, $5 billion into Intel.
Wow. Why?
Well, it wasn't exactly friendly competition. It was strategic. To collaborate on custom AI chips. It tells you that even the top dog, NVIDIA, knows they need reliable partners, secure supply chains.
And the market reacted instantly, right?
Oh, yeah.
Yeah.
Intel stock jumped something like over 20% almost immediately. Just shows how sensitive the market is to any news about these AI partnerships and supply deals.
Okay, so if they're that dominant, what's the catch? Is it just that the stocks run up too much, the valuation?
That's a huge part of it. The risk is basically those sky-high expectations. You could call it a perfection tax.
Perfection tax.
Yeah, the market's priced in, flawless execution, continued crazy growth. So any little slip-up, any sign they aren't totally dominating the next product cycle, or if a competitor actually makes a serious dent,
Stock could get hammered.
it could see major re-rating, yeah. The valuation leaves very little room for error.
Which is a perfect segue to their main U.S. competitor, the one really fighting for that market share, Advanced Micro Devices, AMD.
All right, AMD. They've been making some serious moves, especially in the data center.
How so?
Well, they're building real momentum with their MI300 AI accelerator. That's their competitor chip to NVIDIA's GPUs.
And it's actually getting bought.
Yeah, we're seeing it gain real traction with the hyperscalers, as the sources call them.
The cloud giants.
Exactly. Microsoft, Meta, the companies building these absolutely enormous data centers, they're starting to adopt AMD's chips.
So what does that mean practically? Does it really hurt NVIDIA?
Well, think about it. If AMD can grab even, say, 15 or 20% share for AI chips inside a huge Microsoft data center build-out,
which the sources suggest is happening.
Yes, starting to. That immediately gives Microsoft, the customer, leverage, puts pressure on NVIDIA's pricing power. Suddenly, there's a viable second option.
That makes sense. And AMD is also playing the policy game using things like the TTPS Act.
They're being smart about it. AMD's actively expanding its semiconductor production partnerships here in the U.S., taking advantage of those CHIP PS Act incentives. It's a longer-term strategy, obviously, to build up domestic capacity, reduce reliance on, overseas manufacturing hotspots.
Okay, so we've got NVIDIA, the giant facing enormous expectations, and AMD, the challenger, using new tech and policy to gain ground. That covers the chip foundation.
Right.
Let's shift gears to the companies buying all that processing power. The cloud and enterprise software giants, starting with Microsoft, MSFT.
Yeah, Microsoft is. They're just masters at weaving AI into everything businesses already use.
How are they doing that?
Their whole strategy really hinges on the Azure Cloud Platform, obviously, plus that incredibly important partnership they have with OpenAI.
Right.
They act as the bridge, essentially, connecting that cutting-edge AI tech to, everyday business tasks.
And is it working in terms of making money? Are things like Copilot just replacing old revenue, or is it genuinely new income?
That's a really critical question for them, and the answer seems to be yes, it's creating new income. Features like Copilot, that AI assistant inside Microsoft 365, inside GitHub. They're not free upgrades. They cost extra. A recurring monthly fee on top of the existing subscription.
Ah, so it's additive.
Exactly.
Yeah.
They're using their massive existing customer base. They own the enterprise software channel to push these high-margin AI features out incredibly fast. It generates significant new revenue streams.
That's the power of their software dominance. But surely building all this AI stuff, buying all those NVIDIA chips, that costs a fortune.
Oh, absolutely. That's the main financial balancing act for Microsoft right now.
Yeah.
It's not really about losing market share short term.
It's the cost.
It's managing the sheer cost of AI. Billions pouring into R&D, building those giant Azure data centers, buying GPUs, all while needing to keep profits high enough to satisfy the market. It's an incredibly expensive arms race they're in.
Okay, let's move to the other cloud titan, Alphabet, Google. They've always said they were AI first.
Yeah, for Google, AI isn't just like a new feature they bolted on. It's fundamental. It's core to almost everything.
You see it everywhere.
Totally. Their big language model, Gemini, how AI is changing search results, new tools in YouTube. And obviously, their Google Cloud AI services are very competitive.
It's enormous.
Yeah.
But there was a recent milestone that really hammered home how much the market believes in their AI story, right?
Yeah, a pretty exclusive club they just joined. Alphabet recently crossed the $3 trillion market cap mark.
Wow.
Puts them up there with just Apple and Microsoft in that U.S. super cap tech tier. That valuation basically signals that investors see their AI pipeline is absolutely critical to their future growth and dominance.
But being that big also means regulators are watching very closely. What's the main external threat for them?
For a company like Google, built on data and scale, it's got to be regulation.
Antitrust?
Privacy.
Both. Ongoing antitrust lawsuits, here and in Europe. And the constant potential for new privacy rules that could limit how they use all that user data, which is, the fuel for their AI models. Government action is a real risk that could definitely slow them down. Okay, that covers the big four. In a way, 2 chip makers, 2 cloud software giants. Now, for something a bit different, a company focused on a really specific, high-stakes area, Palantir Technologies, PLTR.
Palantir. Yeah, definitely smaller in terms of market cap compared to the others we've talked about.
But punching above their weight.
You could say that. Because they operate in this very specialized niche, complex data analytics and AI, but specifically for really critical, high-consequence situations.
Like government and defense.
Exactly. They're U.S.-based, and crucially, they have these incredibly deep relationships with the Pentagon and other parts of the U.S. government. That gives them access and credibility in areas others just can't easily enter.
So they're not selling you a chatbot to write emails?
No, definitely not. Think more like mission control software. Their big ambition is to become the essential operating system for AI within defense, intelligence agencies, and also complex industrial companies.
Oh, okay.
Their whole history is in intelligence work, fusing disparate data sources. That buys them a level of trust in these very sensitive fields that, say, a general enterprise software company would struggle to achieve.
But doesn't relying so much on government contracts make them risky in a different way? Budgets change, politics shift.
It absolutely creates a couple of key risks. First, yeah, the dependence on government deals means their revenue can be lumpier, more subject to political winds or budget cycles.
And the second risk?
Because they're smaller and kind of a high-profile, high-growth name, often tied to specific contract news, their stock valuation can swing much more wildly than, a Microsoft or an Alphabet, much more sensitive to news flow.
Makes sense. Okay, so we've covered the core group our sources focused on: NVIDIA, AMD, Microsoft, Alphabet, and Palantir. But they also stress that none of this works without a massive supporting infrastructure.
Right. The plumbing underneath it all.
We can't forget the plumbing.
No, you can't. I mean, all this AI training and inference, it needs networks to move the data, systems to store it, and huge amounts of power.
So the sources highlighted a few other key players in that infrastructure layer.
Yeah. Connecting the dots, they mentioned 3 companies vital for that underlying support.
Let's quickly touch on them. First, the networking side: Broadcom, AVGO.
Right. Broadcom, they're a huge semiconductor and networking company. Think of them as providing the really high-speed pipes and connectors inside data centers.
Got it.
They make a lot of the specialized chips and gear needed to shuffle those enormous AI datasets between all those pricey servers. Without fast networking from companies like Broadcom, your expensive AI data center just doesn't run efficiently.
Okay, pipes covered. What about managing the actual data? Snowflake, SNOW?
Exactly. AI models are only as good as the data you feed them, right?
Garbage in, garbage out.
Precisely. Snowflake is a leader in cloud-based data warehousing and management. They help companies get their data cleaned up, organized, and ready for AI.
So they're well positioned because everyone needs clean data before they can do AI.
Incredibly well positioned. Pretty much every big company realizes they need to sort out their data mess first. Snowflake helps them do that.
And finally, an interesting one showing how AI impacts things beyond just software. Oracle, or RCL, what's their angle?
Oracle's aggressively expanding its own cloud infrastructure, specifically targeting AI workloads. But what's really insightful here is the power story.
Power, like electricity.
Yeah. These AI data centers consume insane amounts of electricity, and often the grid isn't reliable enough. So Oracle's making deals, like partnering with Bloom Energy, to get reliable, dedicated power generation right on site.
Huh. So power reliability is becoming a competitive factor.
It really is. It's not just about having the fastest servers anymore. The sheer scale of AI is making dependable, cost-effective power a major strategic issue and cost center.
Wow. Okay, that really ties it all together. The complexity is huge. So bringing it all home, what's the main synthesis here, the big takeaway?
I think the key takeaway is seeing how these companies, NVIDIA, Microsoft, Alphabet, Palantir, AMD, they represent different facets of the same AI revolution.
Right.
It's like a multi-pronged effort. You've got the chip battle, the race for cloud adoption, the specialized data plays. They're all interconnected, but coming at it from different strategic positions.
Exactly. So now you've got a handle on the core chips, the big cloud platforms, how it gets into enterprise software, the niche data analytics, and even the vital infrastructure holding it all up.
But it's crucial to remember that underlying principle we talked about: high growth demands high expectations.
And those valuations are pricing in a lot of success already.
They really are. Perfection is often the baseline assumption.
So if you want to take this knowledge one step further, here's a final thought to chew on. We've just talked about this almost insatiable demand for AI infrastructure chips, data centers, power. The really interesting next question might be, how is that intense demand fundamentally changing other seemingly unrelated sectors? Think about electric utilities, or maybe the companies making specialized manufacturing equipment for semiconductors.
That's a great point. How do the ripple effects spread outwards?
Exactly. How does this reshape the broader industrial or energy landscape? That could be the focus for your next deep dive, using what we've discussed today as the foundation.
Definitely something to think about.
Thanks for joining us for this deep dive. We'll catch you next time.